Hey, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Sunday, November 27th, 2022, and this is Blockhead Traders Weekly. In this week's episode, it's just myself, Sprocket888, and it was a holiday week this week, so we're going to have a shortened episode, and we are going to kick off what I'm going to call the 1% challenge this week. So I'm going to lay out the challenge for you here this week, and then in subsequent episodes, we're going to build upon that challenge. But before we get to that, I want to give a shout out to our Discord, link in the description below. You can hop in there for free, say hello to myself, the other fellow Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. You can also find each and every one of my trades at thetagang.com/sprocket888. And this episode is also released as a podcast, so wherever you get your podcast, feel free to pick this up and subscribe. So let's hop to this week's content, and it is going to be the kickoff on what I am going to call the 1% challenge. And so what is the idea behind the 1% challenge? Well, the idea behind the 1% challenge is just to get started. There's a lot of apprehension when you're approaching trading for the first time. You think, oh, I'm not going to be good enough at it. I don't have the money to put forth for it. I'm just, I'll just wait a little bit longer. I'll just wait a little bit longer. So if you're like me, sometimes the best way to get started at something is just to start something. And so that's where this 1% challenge kind of comes from. I tried to think about, hey, looking back where I started, what were some of the first trades that I made? And how could I have done that by just kind of starting before I was, quote unquote, ready? What can I do to start laying the groundwork? And so that's the idea behind the 1% challenge. And the reason I call it a 1% challenge, and you can, name it any percent that you would like, but to me, a 1% seemed like a easy entry, kind of a low bar, low commitment to it. And effectively, what it is meant to do is generate recurring deposits into a brokerage account. And as you're waiting for that account balance to grow large enough to trade through this drip, 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 just kind of slowly filling the bucket. Think of it like that rounding up at a cashier checkout, when you have some charity foundation or something like that. And they say, would you like to round up for charity? You're only depositing, 10, 20, 40 cents at a time, but collectively, just that constant repetition and that constant drip, drip, drip slowly builds over time. And so the idea is to start that slow drip. And while you're waiting for that kind of bucket to fill up, there are some things you can engage in that will start getting you comfortable, start maybe boosting your confidence, and start getting you to ask the right questions. And so that's really the idea behind this 1% challenge. So let's hop to some of the details of the 1% challenge. So, like I said, this is all about starting. And I decided to kind of look back, what is the median household income in the United States? I found several different numbers, but generally, it's around $50,000 to $60,000 a year is the median income. So I decided to say, well, what happens if you take 1% of that income and drip it into a brokerage account, just slow and steady? I mean, one of the most tried and true ways that I have found to continually build my brokerage account is I devote a dedicated amount of money that I auto deposit into my brokerage account every week. And it's a small amount of money, but it just kind of drip, drip, drip in there. And it's never this big chunk of, oh, I'm going to deposit, $2,000 into my brokerage account. No, it's very steady kind of drip, drip, drip. And it is something I can budget for. It's in line item in there. It says, hey, I'm going to deposit this much weekly into my brokerage account. And so that's the idea here. So I said, look, the 1% challenge. So the idea is you take 1% of your weekly pay, or 1% of your annual salary divided out by 52 weeks, and put that in your brokerage account every week. So you think, well, what is that? Well, the median income is, $52,000 a year. So divide that by 52 weeks in a year. You got $1,000 a week is the take home pay. So 1% of that is $10. So the idea here is you're depositing $10 a week into your brokerage account. So maybe that is packing your lunch one day a week instead of, dining at a fast food establishment. Maybe that is skipping, 2 cups of coffee that you might pick up on your way to work. It's a small amount of money relative to other expenses. And, you can change that. If 1% is too aggressive for you, back it down to 0.5%. If 1% isn't aggressive enough, bump it up, make it 5%, make it 8%, but the idea here is you make something that is able to be deposited weekly and factored into your budget. And that becomes this slow faucet, which will start filling up your brokerage account. And so the first thing that we want you guys to do is go back, and I'll put a link up there in the description, to the very first episode of How to Start Trading. Just the first episode. You can watch the whole playlist if you'd like, but really the first episode is the key one. And make sure that you're good with all of the things that are laid out in that first episode. It's really about, are you financially ready to try to set aside money and invest in the stock market, trade in the stock market? So first thing, get through that episode. If you read through that episode and you're like, check, check, check. Yep, I'm good, ready to go. Next step is to go sign up for a brokerage account. It doesn't matter what brokerage account you use. The only requirement that I ask you to make sure that it has is a paper trading account. Now, most of them will have a paper trading ability, but when you're checking them all out, just make sure that it has a paper trading ability. And what that is it's basically fake trading. So they will allocate you a certain set of funds in this paper trading account. You can buy and sell. It's all driven by regular market data, regular market prices, but it's all paper money. It has no real value. It doesn't come out of your account. It's just a way to kind of practice. And I've done various comments on how I feel about paper trading. It should never really be considered an alternative for how you will do when you actually trade. The biggest part for me is because your emotions won't really be a part of it. And what I mean by that is, it's paper money. And so as much as you think that will be reflective of how you will actually act and trade when real money is on the line, it just won't be. However, it can be a way to kind of get accustomed to the way price moves, the way stocks kind of trade, get accustomed to whatever brokerage you have to see their interface, find out what it's like to enter a buy order. What buttons do you push? What if you push this? What if there's really no risk that you're going to mess anything up when you go through it. And so I, personally use TD Ameritrade, and I trade on the Thinkorswim platform, but that's just me. I don't have any affiliate links. There's nothing for you to click through to credit me or anything like that. That's just what I myself use. I believe Viper also uses Thinkorswim on the brokerage account. And so, that might be a brokerage account for you to look at. Another one would be E-Trade. Another one that's popular out there, Interactive Brokers. There's a whole plethora of them available. Just kind of Google around. There's probably more YouTube videos out there that would take you through the different pros and cons. Really, I think they're largely all the same. Almost none of them have fees. It's all kind of free trading. There's no minimum deposits. So generally you can start with $50. You can open the account with no money. So you can actually go to the brokerage accounts, sign up, create your account, log in, access their platform, and then fund your account later. So you don't have to fund your account from day zero. You can actually sign up, no cost, and you can actually fund it afterwards. And the way this will then continue is, once you sign up for that on your brokerage of choice, you will then access their paper trading platform. And the next homework assignment here is to just interact with that paper trading platform. See how you look up stocks. How do you enter a buy stock? How do you look up options? Can you see the option chain? Can you put a buy in? Can you put a sell in? Just explore it. Most of those things you can completely wipe out your positions and start over. It's really just kind of a simulator, if you would, for the platform and a simulator for the market. A lot of them are driven off of real market data. One caveat is most of them will just assume that your price gets filled at your ask price, whatever thing you put in, where normally you might have a little arbitrage or something that goes on. Don't worry about it. Just mess around with the platform. After you get all that set up, you're going to go ahead and like and subscribe Blockhead Traders, get it in your podcast so it shows up each week for you. And Viper and myself are going to be putting forth a trade, at least one trade a week. We're going to call it the 1% challenge trade. We will make sure that that trade has a 100% defined risk, and we will make sure that the position size of that trade will not exceed $100. So there is a previous episode. I'll put a link up here that you guys can go watch about position sizing. If you're starting on this 1% challenge, it's going to be pretty much impossible to make trades out of that portfolio that only consume about 1% of your buying power. That's just because that portfolio size is going to be too small. If you're dripping in, $10 a week, you will be able to make trades, but they're not going to be in that position sizing. Now, once you get higher in, the $2,500 buying power account size, $3,000, that's really when you can start kind of adhering to a 1% of your portfolio size per trade. It's tough at that levels. It really opens up more around 10K and above, but don't worry about that, because the idea here is we're just going to get started and we're just going to slowly fill that bucket 1 week at a time, 1% of your salary. Now, when I say defined risk, we're going to lay out different types of trades. I will naturally gravitate towards putting forth options plays. There'll be option spreads where you'll basically be buying and selling an option at the same time. That is going to cap your risk, both cap your upside and cap your downside. It will be a fully defined, I will make this much money or I will lose this much money, and you will know exactly what that is before entering the trade. We might do some equities that will basically include stop orders. So if we say, hey, we're going to buy this equity and we're going to put our stop loss at some particular price, that price is going to be our defined get out price, and that will have a defined loss. So we will not have any unbound trades. That should be able to keep the trades small and fit even the tiniest of portfolio sizes. If you have a larger portfolio or you want to go up a little bit on the position sizing, you can always just do a multiple of the trades that we recommend, or you can change some of the values. It's really going to be up to you, but this is just going to give you a context of something to get started on. And don't fret, even though we're going to start releasing these trades in the coming episodes, your bucket might not be full enough to take them yet. And that's okay. So we're going to encourage you to take those trades using your paper money. So, mess around with the paper accounts on things you've done, things you've explored, strategies you've found, absolutely. But we're also going to recommend, hey, take these 1% challenge trades that we lay out, put them in your paper trade, and execute on them. See how they pan out. Viper and I will likely be doing the same, either on a paper trade, or I plan to take some of my own recommendations and on my brokerage account and execute those trades myself. So let's just take a look real quick at a paper trading account. This is my TD brokerage account. This is my paper trading account. And the way TD Ameritrade is your paper trading account at TD Ameritrade. They just throw in $200,000. That's why you can see the 197, 194. You can kind of take a look for what type of equity you want to look at. Bank of America here. You can look at the options chain. You can choose an expiration month here. You can kind of scroll down. So I say, oh, hey, look, Bank of America, really bullish on this thing. I want to sell one of my 20 delta options, 25 delta. So I can see this 35 strikes going for about 72 cents. I can look in here and I can say, hey, let's go ahead and sell one of these options. I'm going to sell it for, 75 cents. Actually, I should probably do the mid price, 73 cents. And when you push paper trade, it's going to go ahead and and give you all of the statistics about the trade. It says, hey, your break even on this trade is going to be $34.27. The max profit is going to be $73. The max loss is really high here because this is not a defined risk trade. This will not be one of the 1% trades that we recommend. But it gives you your resulting power, and you can push send. It's going to go ahead and place the order. And in this case, it's going to go ahead and automatically fill it because it just assumes that the order got filled, even though the market is not open right now. And then you can kind of watch these positions. It'll give you your P&L on the day. It basically is what you will look like on that brokerage platform if this was real money. It's just paper money. They have all the same chart and analysis. We can look at the details. You can pull up the chart here, look at different time frames. They got the news feeds, so you're getting all the news feeds coming in. And it really is a full simulation of the brokerage platform on how to trade on it. And it has all of the data feeds that go into it are based on the market data that's out there. I believe all the quotes are delayed by like 10 or 15 minutes or something like that. So I guess you could be like, oh, look, I know in 15 minutes this price is going to spike. But, hey, don't look at it that way. Take a look at this from a learning mechanics standpoint, and stay tuned for future updates on the 1% challenge. And that's going to bring us to the end of this week's episode. I just want to give a brief recap here of the things that you are going to need to do to participate in the 1% challenge. Step 1, go back to the episode 1 of the playlist, How to Start Trading. You'll find a link in the description. Then choose a brokerage account. I am not going to provide what brokerage account you should use. The only requirement that I'm going to give you is make sure that they have some type of paper trading available. Do your own due diligence on which brokerage might be right for you. Next step is to configure an auto deposit into that brokerage account on a weekly interval. And the target is to make that 1%, hence the 1% challenge, of your salary. So whatever your salary is in a given week, take 1% of that and give it an auto deposit into your brokerage account every week. So it is a constant flow in there, slowly filling the bucket, and budget that into your weekly, monthly, annual, however you do your budgeting, work that in there. Next, you should have all that stuff set up. Explore that paper trading platform. So open up that paper trading of whatever brokerage you chose. Become familiar with it. Figure out, how do you look up tickers? How do you enter, equity buys? How do you enter equity sells? How do you see the option chain? Just kind of explore that. So you become familiar with the mechanics, the ins and the outs. Then stay tuned to Blockhead Traders Weekly. Like and subscribe. Pull us down in your wherever you get your podcasts, because we will do a brief recommendation or a brief segment of the 1% challenge each week. Viper and myself will lay forward at least one trade with a complete defined risk of $100 or less. And you will take those trades in that paper trading account. You can adjust them for your own risk tolerance. You can completely discard them and draw inspiration from them and come up with your own finds. The idea is you're going to mess around with trades while you're waiting for that bucket to fill up. And at some point, that bucket will become full enough where you will have the equity in your brokerage account to execute on trades. And additionally, you should have your own self-confidence and awareness of the platform that you have chosen through your paper trading exposure to not be as nervous for that very first trade that you give. Of course, you will always be nervous. You will always have questions. But sometimes the best way to start something is simply to start it. Well, the year is winding down. There is still a lot of volatility. That just seems to be the theme in the past several months. Actually, the past entire year, for the most part, lots of volatility, lots of uncertainty. There's no sign of that slowing anytime soon. That is for sure destined to continue as we round out the rest of the year, and I am sure it will continue into 23. So good luck out there in all that you're trading, and remember, think outside the block.